Just optimize with this strategy and enter the market at any moment. That is, the important way to trade this strategy is to combine it with any simple technique and check the main ceilings and floors. As stated in the Dow theory, an uptrend occurs when we have higher highs and higher lows. Similarly, in a downtrend, we will have lower floors and lower ceilings. A trend has two types of movement: impulsive movements, corrective movements. Kinetic movements are in the direction of the trend and have good power and momentum, but corrective movements are against the main trend and usually have less power and momentum than kinetic movements. In the example below, you can see what was explained. The most important of this type of strategy is the range structure, range market. In addition to the bullish structure and the bearish structure that were introduced, the third mode that is created in most cases in the market is the suffering or turbulent structure. In this case, the power of buyers and sellers is almost equal, and there is no special trend in the market. Many traders believe that the market is suffering 80% of the time. So you have to be very patient to start a process. The important point in trading is that if you cannot easily determine the trend of the market, it is probably a bearish market, and in such a case, it is better not to enter the trade. But if you are going to trade in a bearish market, the conventional strategy is to sell at the last high. And on the last floor, buy. BLSH, so to speak. Buy low, sell high. The structure of the range is in the 30-minute time frame, where you could make a good profit with the BLSH strategy. But it should be noted that trading in the pain market requires a lot of skill and experience, and it is recommended that you do these transactions with a small volume at first. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot: key points in market structure. The ability to recognize the end of a corrective movement requires experience, patience, and a lot of practice. After creating a BOS, we usually expect a pullback. The structure of larger time frames is more valid than smaller time frames. Always trade in the direction of the trend. Trading against the trend will eventually take you out of the market. Never enter a trade before identifying a trend. If you can't identify a market trend, you're probably in a bear market. In such cases, the best thing to do is to wait to start a new process. But the thing that is understandable is that you should always take positions in the direction of the trend. When it is in the direction of the trend, the price should activate our entry anyway because we are in the direction of the price. So we will enter at this point. But before, let's enter the whales and banks first. That is, so that the banks can't get our hands redded. When the price always gains a lot of momentum due to a movement, this movement is always dangerous. Or because that area is full of bank entries, that means there are very strong liquidity with volumes of trillions of dollars. We also understood with this strategy how to avoid this, or enter before this. They indicate important changes in price trends and can help you predict possible changes in market direction. These patterns usually appear at the end of an uptrend or downtrend and can be strong signals for a trend reversal. You should look for additional confirmations to use reversal patterns to be sure of a trend reversal. These confirmations can include trading volume, other technical indicators, or changes in economic news and events. Also, as a trader, you should look for strong price breakouts that indicate a change in market direction. Reversal patterns can be powerful tools for predicting changes in the Forex market and helping you fine-tune your trading strategies. Thank you for watching the video so far. I hope you can make the most of it. Watch the video related to the strategy.